All right. Hi. Good day to everyone. Thanks for joining us today on in our SIDS Talk Plastic series. Today we'll be focusing on financing under this new instrument. Um, by way of background, most may know coming out of UNEA that the Intergovernmental Negotiation Committee commenced developing this new treaty on plastic pollution with the aim of completing its work this year. A very ambitious timeline to solve a really important problem that affects many countries, but in particular small and developing states. And due to our unique combination of economic and geographic and resource vulnerabilities, SIDS, small and developing states, are also in the context just disproportionately affected by many different environmental challenges, but plastic pollution, especially given its transboundary nature. So in light of the foregoing, the Alliance of Small Island States and its chair has developed this series of public virtual dialogues to build up and continue to have robust discussions, ensure that we transfer knowledge and information, and to look at things, especially through these issues through a SIDS lens, primarily as well, to see how the INC process can essentially be effective, right? And can build out an effective regime. So all that said, I have an esteemed lineup of panelists. And so I'd go straight into the presentations. And so what I'd want to do is invite first of all Nicholas Hart from Sidley Austin LLP, based in Geneva, and the Minderoo Foundation. So give me 1 second to quickly share my screen so that I can give you the slides for Nick. Nick, can you hear me?
I can. Thank you very much, Mackay. I'm delighted to be here for this session on how to address financing for the Plastics Pollution Treaty. So, oh, your screen disappeared again, Mackay.
All right, give me 1 second.
So I'm going to talk. I'm going to say I'll start talking, Mackay, while you figure out the technology. I appreciate that you're sharing your screen for me. I'm going to focus particularly on one aspect, one particular solution to financing. But in doing that, I'm going to say a few general words about financing as well. And so the general words really come from the problem and identifying what it is we're trying to solve through financing. And the problem really is that there's a major financing gap when it comes to addressing the costs that developing countries will face in trying to end plastic pollution. And I think most of us in this call will be very familiar that the financing problem is one that many MEAs have faced because there has been insufficient financing for developing countries to address implementation of whatever MEA you care to think about. And so if we're really serious about trying to end plastic pollution, I think one of the things we need to do is ensure that we have sufficient and reliable funding for developing countries in giving them the means to implement the treaty. And to know what's sufficient, we have to have a realistic assessment of what their needs are going to be. And to have a realistic assessment of needs, we need to start, first of all, with identifying the different buckets of cost. And what you can see on the slide in the upper left is 5 different buckets of costs that we think, this is a report that has been prepared with the Minderoo Foundation, we think need to be addressed. And they are waste management infrastructure, infrastructure for the transition to a sustainable circular economy, finance for the just transition, money to address remediation of legacy plastic pollution, and human health issues arising from plastic pollution. When you look at these costs over the period from now until 2040 to end plastic pollution, you're talking about very significant sums. Cumulative amount of $350 to $500 billion, which amounts to 25 to 35 billion dollars per year. And so that really means that we need to have in place, I think, a number of different elements to try to ensure that there is sufficient and reliable funding. We need to take into account what's going to be available through traditional ODA type financing, largely from developed countries. We also need to think about where private capital could be available on the basis of return on that private capital. And then I think we need to think about some innovative solutions. One of them is EPR, which targets typically downstream producers. And another one, which is where I've been working extensively, is the idea of introducing a fee on the production of plastic polymers. And this, I think, would be a really innovative way to try to close the financing gap. And so what we've shown with the work that we've done with the Minderoo Foundation is that if you introduce a small fee of $60 to $90 per ton on virgin polymer production, then you could close that financing gap from here until 2040. A plastic pollution fee on production of virgin polymers would implement the polluter pays principle. If applied uniformly, would level the playing field and would also ensure burden sharing across the supply chain. This is a fee that, in the way we've designed it, would be collected by national governments. But a critical feature of the way we would implement this fee is that the revenues would be redistributed through the financing mechanism under the treaty to developing countries. So a portion would be retained by the country of production, and then the majority of the fee would be redistributed to cover the implementation costs of developing countries. And so the fee would implement ODA, EPRs, and other areas of private capital coming in. We've modeled the impact of a fee like this out to 2040, and you can see in the panel in the upper right that a fee like this would make a very significant difference to ending plastic pollution. What this graphic shows is that today we have around 100 million metric tons of mismanaged waste that is entering the environment. Under a business as usual scenario, that would double to around 200 million by 2040. If you had an ambitious treaty without a fee, then you would end up with around 50 million tons of mismanaged waste by 2040. But if you add the fee, then you take that 50 million tons down to around 10 million tons. So you have a 90% reduction from today, and you virtually end plastic pollution. The reason that the fee makes such a big difference between 50 million and 10 million tons is because you are closing that financing gap with the fee, the small fee that I described. It would also lead to a reduction in virgin production, a small reduction in virgin production. It would lead to a small cut in emissions, and it would finance the various buckets that I described in the upper left. We've modeled as well what the impact would be in terms of the social and economic effects. And the good news is that there would be negligible negligible adverse social and economic impact, because we're talking about a very small fee. It's around 5 to 7% on the cost of a polymer. And when you get to downstream plastic products, that becomes a tiny fraction of the overall costs. So in a nutshell, what this fee does is fall into a very sweet spot where you have an outsized environmental impact in terms of its ability to help reduce plastic pollution, by providing developing countries with the finance that they would need. And you do that in a way that has virtually no impact on social and economic costs. So this we see as a really important part of a holistic solution to ensuring that there is sufficient and reliable financing for a plastic pollution treaty.
Andy.
So I'll stop there, Mackay, hand back, and happy to take questions later.
Thanks a lot, Nick. Sorry about that. Yeah, I was trying to find and navigate the slideshow and everything else. But thank you very much for that interesting presentation. I thought it had some really good numbers on it, some good points to move forward and think about from the holistic implementation side of things. So I really appreciated that, and also you kept right on the time as well. So appreciate that as well, Nick. All that said, I will now try to upload the slide for Dennis's Dennis's yeah, sorry, give me 1 second. So Dennis's slide. So let me just pause here. Um, just double checking that you're seeing your slide on the screen, Dennis. Yeah.
Yes, thank you.
All right, no problem. And just to introduce, sorry, apologies about that. So just to introduce Dennis quickly. So Dennis Clare is the finance lead for the Federated States of Micronesia, and they have proposed, especially very early on, a very detailed proposal on financing. And so we'd love Dennis to explain it over the next 8 minutes. And so the floor is handed over to you.
Okay, thank you. Good morning, everyone. And thank you to IOSIS for hosting us. Also, happy Independence Day to Vanuatu, who's our PSIDS chair right now. So this discussion is about a small piece of those large numbers that we were hearing about before. So just to put in context, this proposal for a fund is the fund that would support developing countries in the programmatic and operational aspects of carrying out treaty work. This is not necessarily the expenditures that businesses would make or consumers, but this is the core heart and lungs of the treaty. The countries making the policy, having people to report back on what's taking place, regional networks, but I will get into that. So the proposal is to create a multilateral fund for plastics that's modeled largely after the multilateral fund that implements or that helps to finance the Montreal Protocol. And similar to the Montreal Protocol, the plastics industry is one which would be best addressed through production and consumption restraints. And we hope to get some of those in the treaty. And then you can address production from the top of the cycle, and that helps largely with dealing with fossil fuels as well as plastics. There's a big resistance to addressing production at all, so we'll see what happens there. But regardless of what's addressed in the treaty, there are certain operational aspects that countries will need to undertake, and we think that a multilateral fund, publicly funded with money from developed countries, is the way to approach that as under the Montreal Protocol. And in the slide, it's a little bit small, but I can explain the directly funded activities for developing countries would include institutional strengthening, including national offices and officers that we proposed, much like under the Montreal Protocol, support on reporting back on compliance measures, policy development and implementation, pilot and demonstration projects. These are some of the things that Montreal Protocol has been very successful with, and in reports from UNEP on why certain treaties function and why certain treaties don't, as was said before, funding is a large part of it. And Montreal basically functions better because it funds more of the activities. In addition to the enabling activities, there's agreed incremental costs for just the compliance that the countries have to undertake, whether that's production, manufacturing, in-use and reuse systems, waste management project preparation, all kinds of other agreed incremental costs, depending what's stipulated in the treaty that needs to be done. Incremental costs are typical in the climate treaty, and in the Montreal Treaty, the costs that are added to what you would have had to do basically if there weren't a treaty. Then there's the clearinghouse functions, such as technical assistance, implementing agencies and networks, some technology transfer, capacity building and training, education and awareness among consumers. I have posted a link to a more detailed paper from us on what this fund would look like, how the secretariat would work. There's an executive board. And then this sort of chart is an initial look at some of the other pieces that might have to come into play in addition to this core fund. And in fact, these pieces are where the big money is in the private sector and in the streams of commerce of the plastics industry worldwide. So it's critically important to have these operating, but the function of the governments in keeping the treaty alive in the first place, and in having policies and implementing national policies which drive these, obviously international commercial activities, is at the core and needs to be supported. So outside of the fund, you could have a remediation fund. We propose using a fund like the JEF to do the things that the JEF is good at doing. The JEF doesn't do so much programmatic funding across all countries, but it does a great job on concessional funding and projects. So if you wanted to build maybe a new recycling plant or waste management system on a large scale, a one-off project, we think that a JEF could be a complementary fund. A remediation fund could be complementary, and the private sector can play into various sectoral initiatives, or a remediation fund fee. The fee idea can tie into all of these, whether the private sector pays into a fee that's for a fund or for a lot more of these different activities. But the idea for the multilateral fund is just the small amount of core activities that the governments undertake to keep the system moving. And in addition to the fund itself, we proposed a network of plastics officers who oversee the activities in those countries, and work with regional networks on the best practices in their regions, much like the officers under the Montreal Protocol. So this core fund would be under the governance or under the management of the Conference of the Parties, and would certainly interrelate to the many other bodies that it has to work with on a regular basis, including the potential technical and economic committee, which would help create estimates for what the budgets would need to be for replenishments on sort of a triennial or quadrennial basis. Again, this is not one-off projects, but the programmatic activity that the countries undertake on a regular basis every year, just to keep this system moving. So it's critically important, obviously, that we keep the system moving, and that money comes early. Some of these countries are going to need funding just to ratify the treaty. So this is not funding that really could come at the end after laws are passed in jurisdictions implementing fees. This is this core small amount that needs to be begun to be made available maybe before the treaty is even brought into force. So it's obviously critically important how all of this public money to governments then interrelates with the broader system that those policies are driving in the international plastics commerce. So we need to figure that out, but this is the core piece, much like under the Montreal Protocol, that keeps the countries moving while the larger policies drive the bigger industrial policies and the streams of commerce and the consumer activities. It's just sort of a stimulus system to keep the larger system moving. I hope that makes some sense. I've posted a link to the larger paper, which has more detail, and obviously happy to take questions as well.
All right. Thanks a lot, Dennis. I hope you all can hear me. Yeah, so that was really good to hear that proposal, to look at that proposal for, the financial arrangements, the proposed financial arrangement that you had in mind for the treaty, as well as just generally understanding, how that would work. So what I would go next to, so obviously, we went from kind of the concepts of the fees that Nick highlighted, to the vessels in which, potentially the fees may interact with and things like that, this on a multilateral scale. And I noted that Dennis highlighted and noted about the involvement of multilateral development banks and IFIs. And so this fits perfectly into segueing into our next speaker, which is Tao Wang. He is a senior environmental finance specialist at the World Bank, so the world's largest multilateral development bank. And we look forward to hearing your take on how financing under this regime from the MDB's perspective, I guess the biggest MDB's perspective, may play out. So I'll hand it over to you. I don't know if you want to share your screen and your slides. So take it away, Tao.
Thank you very much, Makai. Good morning, everyone. Thanks for the invitation from the host, the chair of AOSIS. It's a great pleasure to be here. And we all understand that small island developing states are disproportionately affected by global environment challenges, including plastic pollution. And the World Bank is very committed to supporting SIDS in addressing plastic pollution as part of the development challenges. So I will spend the next few minutes to talk with you about two things. One is the different options for establishing a financing mechanism, pros and cons for each option. And also we heard a lot, the new dedicated fund, the existing fund, and hybrid approach. So what each of these things means from our perspective. And then the second thing I will talk about is some of the factors that you may want to consider while establishing a financing mechanism. So the presentation is intended to share objective information and help you better understand the subject. So we are not taking any views, any positions, absolutely indifferent. So with that, let me put up my slide. I hope you can see my slide. Yeah. So the subject is options for establishing a financial mechanism. All right. So from our point of view, there are possibly three options in establishing a financial mechanism. Option one, you can see on the screen, is to create a new fund that has legal capacity and is not hosted by an existing institution, for example, the World Bank. And in this case, a new institution would need to be established under the laws of our host country. So one example we all know is the Green Climate Fund that is hosted by the Republic of Korea. It was an entirely new fund, almost a new institution, right? And then the second option is to integrate a plastic financial mechanism into an existing fund. So within this existing fund, we can consider to create a new window or broaden the mandate of an existing funding window or adding a new fund in an existing family of funds. So one recent example will be the Global Biodiversity Framework Fund. And then the third option is to create a new fund to be hosted by the World Bank or another institution. From the World Bank's point of view, this kind of fund is called Financial Intermediary Fund, FIF. So the new FIF will operate through the legal personality and capacity of an existing institution, for example, the World Bank. So one example would be the Climate Investment Fund, hosted by the World Bank and implemented by multiple, multilateral development banks, MDBs. So out of these three options, option 1 and 3 both involve setting up a new dedicated fund, whereas option 2 is utilizing an existing fund. And what the hybrid approach means is you may decide to make an interim arrangement, say option 3, set up a new fund hosted by the World Bank, but then revisit this decision after the interim period. So the fund can remain as is, or the fund may transition to another structure. For example, option 1, entirely new fund. So one example we have seen taking this hybrid approach is the Fund for Responding to Loss and Damage. So the COP, Climate Change COP, basically decided to establish a fund for responding to loss and damage with an interim arrangement, inviting the World Bank to host the secretariat for interim period of 4 years. But then later, it may decide to remain or transition to a different structure. All right. So with that, let me move on to talk about the pros and cons of each of these options. So option 1, establish an entirely new fund, certainly will give us the maximum flexibility in terms of policy, rules, and procedures. The fund can set its own terms for access to and use of funds. But the challenges under this option will be the setup can be very time-consuming, costly, and labor-intensive. Also, it adds greatly to the fragmentation of financing architecture. Option 2, integrating the plastic financial mechanism into the existing fund will allow us to establish this fund much faster compared to option 1. It really allows us to leverage the existing fund's structure, process, and system. And as you can imagine, this option will be quite cost-effective compared to option 1. But then the challenges could be it's less flexible, and the structure, depending on the arrangement, the structure could be a bit complex. And then the establishment, design, operation of the fund is subject to the hosting fund's governing body's consent. Now, moving on to the third option, a new fund hosted by the World Bank is also relatively faster in terms of establishment compared to option 1. It can leverage the World Bank's legal capacity, privilege immunities, existing structure, process, and system, and cost effectiveness. Also, under the this option, compared to option 1, it's less flexible, and also since it involves adding a new fund, so it may contribute to fragmentation of the financing architecture. Now, I wanted to end my presentation just to share with you some of the factors for consideration while establishing such a fund. First is we heard that there's a broad recognition that such a financing mechanism is very much needed, but we're not sure in what form. Is it new dedicated fund? Is it existing or hybrid approach? So the point that I wanted to highlight is often we say that the form should follow function. So before we determine which form is the most appropriate form for such a fund, we need to really think through what activities the fund is supposed to support, the funding magnitude, the potential sources of funding, the means of mobilization. So all these would determine what will be the most suitable form of the fund. And then the next point is private sector engagement and innovative financing tools and mechanisms are essential. But the question remains whether the private sector contribution is included as a voluntary basis or mandatory basis. How we include the private sector contribution? What is the implication in terms of the governance structure of the fund? And then we hear a lot, stakeholders, member states really have a strong desire to have streamlined process and have easier and faster access to the funding. The timeliness and efficiency of the fund is critical. Then the question we may want to consider is whether we want to establish simplified requirements to access the fund, whether the fund would enable direct access. And last but not least is fund modernization and fund structure, because the current financing architecture for climate change and environmental sustainability is quite fragmented. There are lots of funds already there. So we do want to avoid further fragmentation and proliferation of funding mechanisms. Also, accountability, transparency is very critical. So the question we need to think about is how to align the financial flows, how to leverage the existing institutions and funds so that we do not necessarily need to create from scratch, and seek ways to maximize efficiency and synergies. So with that, let me stop my presentation, and very happy to answer any questions and have a interactive discussion. Thank you. Back to you, Makai.
Thanks a lot, Paul, and appreciate you condensing decades of history and procedures and knowledge of financing mechanisms that the World Bank has been involved with since the inception of multilateral environmental finance, right? Which again now perfectly segues us into the next speaker, who is a part of that institution that started out public multilateral environmental financing, and also a good colleague of mine. So I would like to introduce Chiz Aoki, who is now manager and Conventions and Funds of the Conventions and Funds Division of the Global Environmental Facility, which is one of the original sort of environmental financial intermediary funds, as highlighted by Tao. So Chiz, are you online, and can you hear me? Yes, okay. Please go ahead. The floor is yours.
Thank you so much, and good evening from hot and steamy Tokyo. And first and foremost, very much appreciate AOSIS for actually organizing this session and inviting the Jeff to participate. As introduced, I actually have been managing the various funds as well as the conventions that Jeff has been fortunate to be designated as financial mechanisms. So what I'm going to put on the table is basically very practical as well as fact-based information. And what I can tell you, Amika, I'm sure you know this, had we had this conversation 2 or 3 years ago, what we would say today is not going to be the same as what we're going to say today. So I think one thing to keep in mind, first and foremost, and there has been a lot of evolution as well as changes, and some might call it reform. And this is in line with a lot of what member states as well as parties to different conventions have asked us to do. So Tao basically presented his view on how the funds and the financial mechanism will function and what new funds will look like. My take on this, based on our experience and from the perspective of Jeff, is somewhat different. But anyway, so let me just give you a couple of options that we can tell you based on our own experience. When you're talking about, and this is one of the questions he had, what are the advantages and disadvantages of adding to the conventional, the existing financial mechanism? Look, as of now, the GF, we serve 6 conventions and we have 6 trust funds, right? So depending on what the member states or parties decide to do, One option, the most recent addition to the MEA financial mechanism that the JEF, this is GBFF, decided to do was basically ask the JEF to be part of the financial mechanism. But that financial mechanism function to be absorbed, if you will, under the JEF Trust Fund, which, as you probably all know, is the largest trust fund. And the resources were set aside during the replenishment negotiations to about $34 million. And once the BB&J negotiations concluded, the council decided to release the money, and what the money can be spent for the countries for the interest, generally speaking, is early ratification support and early action. So in terms of what countries might need to get support to get to the point of making the decision to become part of the convention as a treaty, as well as what they might need to start doing the implementation of early actions. Those are the kinds of things that got built into the JEF Trust Fund to support. So that's option number one. That's basically for a treaty or new agreement to be part of an existing fund. Right. And it comes with its own governance, but it can have its own programming directions. It can actually hit the ground running fairly quickly. Another option is an establishment of a new fund. And this is the example of the Global Biodiversity Framework Fund. Tao said it's not a new fund. As far as we're concerned, and I think the World Bank, the process is concerned, it is a new fund. What's been really interesting in a good way from our perspective is that this is the new fund that would enable contributions from all sources. Other trust funds, as you know, have more or less been sovereign fund. We've actually got support from let's say states as well as municipalities. But this is the only fund that has been established based on feedback from the guidance from the Conference of the Parties, that parties wanted to have a fund that could accommodate contributions from all sources. So it's a new fund that would enable sources to be actually admitted based on the due diligence process with the trustee. And another element that I want to highlight is that parties also wanted to have a different governance structure. So there is a different governance structure with auxiliary bodies as well as subsidiary groups. And parties also wanted to have a drastically different streamlined project cycle. So we decided that this particular fund is not going to follow the typical JEF, submit your PIF, go to council, you have the period, go back to council or go back to CEO endorsement. We said we will make the decision for you to release the resources based on a very short, up to 6 pages or so, project preparation grant request. And based on that, once the approval is given, the resources are set aside, you then have 9 to 12 months to come back to us and submit a fully fledged proposal. So the point I'm trying to make it is in terms of access as well as the modalities to get the resources into the hands of parties or aspiring parties, there is a lot of flexibility that the negotiating member states can put on the table to signal to whatever the financial mechanism construct will be. And if it's going to be the GEF, I think you can actually refer to the example of the GBFF, Global Biodiversity Funds Framework Fund establishment, to see what's actually feasible. One more element that I want to put on the table is that the first 2 examples talked about how to get the resources from non-sovereign sources, private sector assessments and fees of that nature, right? And I think what's really important is that the member states actually negotiate and have much clarity as to what all sources of funding might mean and how you go about making sure those are going to be usable as well as programmable in the financial mechanism. And I think a little bit thought on how that would be done would go a long way as to really understanding and crafting a structure that's actually workable, implementable, and actually done in a timely manner. And that's something that that we are very keen to better understand and provide you with any inputs if member states or any institutions would want to see. And this is a lot of interesting information coming out, but at the end of the day, how you go about having the due diligence system, how do you ensure that the money would actually flow into the funds to be distributed? Those are the elements I think we really need to think about very carefully. Last but not least, I have a lot to say on these topics, is that I think there is a very specific reason, a good reason that we're having this conversation within the AOSIS umbrella, which is the vulnerability as well as a lot of impacts that the SIDS are facing from the plastic pollution. And obviously this is also applicable to other global environmental issues, right? So when you think about having a financial mechanism, as well as how the resources would be programmed, you would probably also want to continue to explore further options for targeted support for SIDS and LDCs. Ring fencing might not be the correct politically correct terminology to say here, but if it is something that parties and member states are seeking, it is something that that has been done in other financial mechanisms. Funds have been established with a specific dedicated support to LDCs. There have been windows established dedicated to the SIDS, and for the GBFF, there is a target set for the programming for LDCs and SIDS, as well as IPs and the use of specific IFIs. So these are the elements. Of course, some of these details at the end of the day would need to be figured out once a decision on the financial mechanism is made. But how the bigger what decision gets manifested into the design elements of financial mechanism, I do think that it's really important for member states to look into what's been done, what has been feasible, what are some of the flexibility that has been sort of demonstrated recently, and inform your decision based on some of these facts, as well as potential for further change. For the GEF, we're also going to enter into the replenishment negotiations starting next January, and it's typically the time for countries to really discuss more significant governance and other programmatic reform measures to also further and sort of go from the project type of approach to programmatic approaches. I think as of now, more than a third of interventions are programmatic. So I think that the train has left the station, and I think it's continued to go on. But are there any other elements that the countries would want to see? And the timing of the plastics negotiations would be very favorable, if you will, to have some of these bigger governance, programmatic, other issues that you would want to put on the table also be brought up within the context of the replenishment, which can have cascading impacts for all the funds that Jeff will be managing. So with that, thank you so much. Happy to answer any questions you might have. Back to you.
No, thanks so much, Chiz. So that was really good. Similar to others as well. Masterclass is in their different areas, from Nick starting us off, really rightfully so with the fee, how we can involve the private sector, get that money flowing, mobilization from a different standpoint, which was really good. Then we had Dennis, which came and brought the experience from the multilateral fund, right? Under the Montreal Protocol, and the experiences there, noting, the success of the Montreal Protocol in itself of achieving its objectives and its financial mechanism there, and how it could potentially be applied here. Then Tao, again, your presentation, really good presentation on simplifying a very complex financial intermediary fund system, right, of the World Bank, which has policies that dated all the way back to the GEF, going forward, going to the 2019 kind of reforms of the fifth framework, and even now as it's even kind of the framework in itself is being tested by the fund for responding to loss and damage, right? Because again, parties are trying to push it even more to make sure things are accessible, etc., and beyond that. So really good to see that coming from the World Bank. And then lastly, which is your experience coming from, especially from BBNJ, which is the most recent treaty. So that's biodiversity beyond national jurisdiction. So the SIDS treaty, for those who may not be in that space, and kind of understanding as they're taking lessons there and immediately from that, and how it fit into the central GEF Trust Fund, and more broadly noting that they have to still decide on their special fund, right? And operationalize those modalities when the COP decides, once they get the enough ratifications, and what will then be the role of the GEF in that context, So all these things that we do need to bear in mind, and I do think that the two other points that you made, which were really helpful, which speak back to other points, is due diligence, right? Due diligence in the context of reviewing funding that is coming from the private sector. And noting when money, and it brings together everything, right? Next funding coming from the private sector inside to the public sort of global public goods. How do we then that system, if you use a certain standard, is very intensive, right? And typically what has happened with due diligence is that it's either the secretariat of the fund does it, or it's the trustee that does it, and then there's this back and forth. And so I think all need to be clearly kind of understood over the roles and the responsibility of due diligence, and whether or not maybe the burden of due diligence is way too high, given potentially the need to get resources out the door into the places that it needs to go to. So all of these different things. And the last thing is on SIDS and targeted support for SIDS. And I think, Chiz, again, you highlighted the GBF, which is a really good example, because I was looking at the GBF's current portfolio that they approved, I think, a couple of months ago or a month ago. And there wasn't that many, I think, SIDS and LDC projects, even though that they had that target. So it as well kind of speaks to having targets, but as well, how do we operationalize that and help support the GEF to get the pipeline of projects out for meeting those projects as well. And I know that you guys are really on that. So I will stop here to try and summate all of that really good inputs. And so I know Jonas has had their hand up. So I'm going to give the floor to Jonas, and then I will take two other questions, noting that there's already one in the chat that I'd want to highlight from Julia. So I'd take a third after that. So if anyone wants to quickly raise their hand, but Jonas, you have the floor to ask your question. And sorry for the wait. Yeah, over to you.
Hello.
Hi, Jonas. Yes, we can hear you loud and clear. Please go ahead.
Thank you. Yeah, I just had a short question if the slides will be shared.
Yeah,
Afterwards.
absolutely. Yeah, so from what I understood, there were a couple of questions that were answered. I think Nick said he's willing to share, as well as there were the links to Dennis's presentation. I'm not sure about Tao's. Tao, when we give you an opportunity, oh sorry, yes, so Tao's shares slides won't be shared, but the other two would be shared. And again, Tao highlighted and put a disclaimer at the front, right, about the positioning of the bank at this time and wanted to remain neutral, which they typically do want to do in the stage of negotiations. So the other two will be provided. I hope I got that correct, Tao. Yeah.
Okay, thank you. And then maybe the other question to Tao on the hybrid approach. When I saw the presentation, you presented that option, merging option 1 and 3 would be considered as a hybrid approach. So it would be a new fund under World Bank and a new fund not hosted by the World Bank. I think there's also what most of people would I've understood would be there would be a mixture of option 2 actually of an existing fund with a new fund, the option for a hybrid fund. Could you please indicate a little bit more on that?
Okay, thanks a lot for that question, Jonas. So I know that you had that question, and I think that there was another question to you, Tao, in the chat. So that one was, what role does plastic credits, which is interesting. This is the first time I've ever heard of plastic credits, play in financing arrangements? Maybe I've been too much away from the plastics discussions, but I hope we're potentially not going down the route of similar to carbon credits. And I heard there's biodiversity credits now, and we like to throw market solutions on things, but it will be interesting to get, I guess, the views on the World Bank if they do have that discussion. So that's that question from Julius. And seeing that there are no other hands raised, what I'll then do is give the panelist, after Tao answers his questions, just a minute to kind of give closing thoughts before we generally close up after, and just react to a lot of the things that you heard with the wide perspectives. So Tao, please go ahead. You have the floor. Yeah, go ahead.
Thank you very much for these questions. It's excellent to have the opportunity to exchange. Let me start with the plastic credit question. In fact, recently we did a study looking into this financing mechanism, its opportunity and the risks, also put forward some recommendations. I will find the link, maybe I can, through Makai, share with you the report. From my point of view, this is one of the innovative financing instruments that we can explore to leverage private sector financing in tackling plastic pollution. Of course, there are challenges. You will see from the report, there are risks and challenges. For example, we need to enhance the governance of this plastic credit. Need to establish minimal requirements and ensure the robustness of the methodology. And also, I wanted to highlight that recently the World Bank issued a plastic bond that also the plastic bond support used plastic credit to really generate revenue that can be used to pay back to the bond investor. So again, this is something that, as I mentioned in the presentation, are some of the innovative financing instruments that we can deploy to leverage financing, particularly private sector engagement in tackling such a enormous challenge. I think to Jonas' question, I think yeah, certainly, when you talk about hybrid, there is a possibility of combining option 1 and 2. And then the reason I highlight the option 3 hybrid option is really inspired by the recent example of loss damage fund, where reflects a lot of the parties desire to set up something fairly quickly, and then over time to revisit and make a informed decision. Yeah, and then in a way, as Chiz said, that under option 2, there are many different ways of arranging that, right? Some involve a new fund, some involve really just existing window of a fund or expanded mandate of a fund. So there are many nuances. Yeah, maybe my presentation is a little bit simplistic, but happy to discuss further offline. Yeah, thank you. Back to you, Makai.
No, thanks a lot for that, Todd. I think you answered all the questions very well. So I'll hand over quickly to Chiz for your minute on closing reflections and interacting with the other panelists' presentation. So over to you, Chiz.
Yeah, thank you so much. I think at the end of the day, you want to establish and operationalize something that's workable and that's predictable, and that also will have ease of access and as wide and can cast as wide a net in terms of the sources of resources, while not making sure that it's not a pie in the sky, right? So I think realism with the vision and ambition, combining those things and how those comes out, I think that is going to be an important element. One thing I do have to mention, particularly within the context of SIDS, is that there are specific needs, a lot of vulnerabilities, as well as other global environmental issues that SIDS are facing, obviously climate change being one of them, but also how to deal with the international waters, oceans issues. So having options that will enable you to tap into different sources of support, where you can also do integrated programming that's not just about the downstream impacts of the plastic pollution, but midstream as well as upstream, and having the policy as well as institutional frameworks that are suitable for SIDS and getting the resources you need to enable those to be verified as well as also put into place and implemented. Those are some of the tricks that I think for the SIDS community you will really need to think about very carefully, and what will be the practical as well as timely options to move forward. So any information we can provide from our side, we'd be happy to continue to engage. Thanks.
Really appreciate that, Chiz. So I will now hand it to Dennis. So Dennis, if you're still on, this is your 1 minute to, again, respond to all the panelists and all the great information that we just received. So over to you, Dennis.
Thank you, Makai, and thanks to everyone. I would just say that for the multilateral fund proposal, we do prefer a standalone fund, and we think with the experience that we have with these other funds at this point, it wouldn't be quite as long to set up. But certainly that fund could also be temporarily housed in an existing fund during its establishment, and in some place, even the multilateral fund itself in Canada could function as a host. The key thing for this treaty, and the reason we've chosen the multilateral fund from Montreal as the model, is that it's not an occasional project finance operation. It's a programmatic activities of governments that take place year round, year after year after year after year, to keep this thing going. So the finance has to be accessible, or the mill sort of shuts down. So there's a 3 or 4 year replenishment, and the fund is designed such that the things you do under the treaty are approved, and the people approving it are your fellow negotiators on the executive committee who do these types of things. So there's obviously going to be a lot of extra pieces, but for the core activity, we think a standalone fund that's dedicated to specifically those pieces. It could operate on its own. It could operate under a similar programmatic fund like the MLF. But we think that's the core of the government finance. And then the next piece is, how do you integrate all that with all the other pieces? And that's where we think our little slide is a picture. It's a thought starter for everyone to sort of think, what are these pieces and how might they fit? It doesn't answer those questions, but it provides some pieces to move around in the puzzle. Thank you.
Yeah, appreciate that, Dennis. And also appreciate the point that you keep on highlighting, which is very good, is programmatic funding, and making sure that we all have a clear understanding of what that means as different persons who engage in this process, because I know that they have various different definitions of that. But I understand primarily where you're going at is that it's long term. It's predictable. It's integrated with the national systems of the country that is being provided, and so it provides that predictable ease of access that can fit into the grain, as opposed to being projectized and very short term. So I really do think that that's very important for us solving issues, especially the plastic pollution issue. So thanks a lot for that, Dennis. So Nick, you have the final word. Yeah, so please go ahead, your final minute, and then we'll close off. So over to you, Nick.
Thanks very much, Makai, and thanks to the other speakers. So first, an observation that most of the other speakers have focused on the architecture of the financing mechanism, whereas I focused on what are the needs and what are the sources, and is there a gap there? And I just want to say that in the negotiations and international work, it is absolutely vital that we discuss not only the architecture, but also the needs and the sources. And the Minderoo Foundation has devoted quite a lot of resources to looking at both needs and realistic sources. And when you look at the needs and you look at the realistic sources, you find that there's a very significant financing gap. To close that financing gap, we've proposed a fee, which would be an innovative way of raising money from polymer producers to ensure burden sharing across the supply chain. So it's not only the producers at the end of the chain, the brand owners who are covering EPR, but it's also the producers at the upstream level as well. Now, why is that important? Because with money from a fee, we can cover some of those critical needs that I identified: waste management, infrastructure for circular economy, just transition, remediation of legacy plastic pollution, and health impacts, all of which are vital for SIDS. And so I think we need to be creative in coming up not only with an architecture, but also in closing the financing gap. And so I commend to the negotiators who are here and to the audience the idea of a plastic pollution fee. Thanks very much, Makai, and thanks to the organizers.
No, thanks a lot, Nick. I think that rounded kind of the discussions very well. And I think it also speaks to what Tal was saying about form following function. And I think a part of the function is beyond just like what we're targeting, what we're focusing on to spend on, which is very important, but as well, you know, what are the type of resources, that the sources of the resources, as well as the size of the expected financing coming in, because then that will inform what type of architectural features, you know, you need to have in the financial mechanism, right? So instead of, is it a fund that's dealing with hundreds of millions or billions, right? And that will dictate again the form of whether it be the multilateral fund, whatever type of fund that we do decide on. So I really do think that it's good that we're having both of those discussions together at the same time before we finalize the treaty. So I think that is a natural conclusion. And to this discussion, I want to say thank you to all the panelists. This was a really, really good discussion, and thank to you all, the audience, and then obviously the thanks to the general EOSIS team for planning and putting this forward. So have a great day. I don't think there's any other final notes that I have to give, and we will keep you posted on many more events that we have in this SIDS Talk Plastic series. Thank you again. Bye, everyone.
Thank you all.